And it's now time to welcome Rob Lees from Mortgage Choice Blue Mountains and Penrith for our weekly finance segment. And today, Rob, we're going to talk about the 6 key elements that make up your financial health check for 2015. Welcome back,
right.
Rob.
Thank you. Good to be back, Van.
Rob, sorry. Oh, gosh, I'm slow. Sorry, it's our first show. We've got to
First show for the year.
First show for the year. I'm still maybe a little bit in holiday mode, but not too much, sorry. Rob, the first element of a financial health check is, do you have a savings plan or an investment strategy? Can you talk to us a little bit about that?
Yeah, and just a bit of an intro to this. I thought it'd be good starting a new year just to have some of these questions here, just to check out how we're travelling. And just take a bit of time to review it. So look, first question there about having a savings or investment plan is, the reason for it is the opposite to financial health is financial stress. And we're under financial stress if we're spending more than our income, okay?
That'll do it.
That's exactly
Every
right.
time.
So if we're living week to week and spending what we earn, we're soon going to find ourselves under financial stress, because an unexpected bill's going to come up, something's going to come from left field. So that's why it's important to have some kind of savings plan or investment plan. So it may be investment plan, maybe to buy an investment property or to invest in shares or a managed fund or something like that. But the key thing is that we're actually putting some money aside that is from our weekly earnings or fortnightly earnings that is there to help us get ahead and to provide a buffer for us. So that might be for someone who doesn't own a home, to actually set up a savings account and put $100 a week aside there and build that up. And maybe that account is to buy a home eventually. If you are a homeowner, it may be that you decide to put in a strategy where you pay an extra $100 per week off your mortgage, or maybe it's $200 a week. But the idea there is that you're going to build a buffer if there's emergencies or an unexpected bill, that you've got access to some kind of cash, so that you're not under financial stress. So if you don't have a plan, you need to put one in place.
Get yourselves a plan. Okay, Rob,
right.
Now the second element is the plastic, isn't it? Is
Yes.
whether your credit card is under control.
Yeah, is it under control? So I would say, and we need to ask ourselves that question. Your credit card is not under control if you've built up a balance, and when that balance falls due, you're not able to wipe it out. You're not able to pay it totally. Paying off credit card debt is going to cost you big time because the interest rates are so high. So again, if you've spent a lot over the Christmas period on Christmas presents, on holidays, and all these fun things that we enjoy, which is great to do, it's important that you put a strategy in place to pay out the credit card debt. Get it out of the way, otherwise it's going to hold you back. So that's got to be a priority.
Well, what about that strategy that some people employ where they use one credit card to pay off another?
Oh,
So
Vent. I don't.
the big juggle.
I'd call that financial stress.
It is, isn't it?
It's a terrible place to be, and no one seems to get ahead when they do that.
Yeah. See, when I was brought up, I was brought up never to be in debt, right? Never to have any, and that sort of stuck with me, which is a good thing. And with our credit cards, basically we use them for the 55 days interest free, and that's it. Like
If you use it that way,
gets paid
and
off
it's
automatically.
paid off,
Yeah.
and that's where, again, if you've got this buffer, for example, if you're ahead on your home loan and you do have a big month like after Christmas, and you are ahead on your payments, you can actually draw then on your home loan and wipe out the credit card balance totally, and that's a good way to live.
Yeah.
Now, Rob, your third element of the financial health check is an interesting one, because it's, do you give a portion of your income to charity, which is a very good thing to do, but I found it interesting as a third element.
Yes, I wanted to include this because I think it's all part of financial health. I think giving's not only good for the soul, for us to give, but I think that part of being financially healthy is to be in a position where we can actually give to others in need. We're pretty blessed in the country that we live in. Most of us, in world standards, we're wealthy people. Yeah. And so again, I think it's a little bit like having that buffer of savings. I think we also need to have, we allocate a portion of our income to give, and it may be to our favourite charity, it might be to sponsoring a World Vision child, or whatever it might be, whatever's close to our heart. I think it's not only good for the soul to give, but I think it does something to us, and I think it does something to us in terms of the way we manage our money if we're givers. So if you don't have a strategy to give, January 2015, put something in place, even if it's small. And I think that's all part of financial health.
Yeah, couldn't agree with you more, Rob. It is important to give, and again, like, earlier on we were talking a little bit about travel, and I was saying how important it is to travel, immerse yourself in other cultures, find out about them, and quite often, I remember the very first time I went overseas, one of the things that stuck in my mind is, gosh, how lucky are we in Australia? How well off are we as a country and as a society? And yeah, couldn't agree more, Rob. Giving and giving to charity is it's good for the psyche, it's good for the soul, and I think
it's good for the world.
And it's good for the world. And I think, as you say, it should be part of our financial strategy. Yep. All right. Well, that's 3 out of 6. Let's have a little music break. How about a bit of the Doobie Brothers with China Grove?
Yeah, China Grove and the Doobie Brothers, and we were just saying how we all love the Doobie Brothers. I think it's kind of showing our age, but they had a really cool sound, and Rob loves Best of the Doobie Brothers.
Good. One of my favourites.
Yeah. Okay, so we're back with Rob looking at your financial health check for 2015. Rob, let's turn to the fourth element of the health check, and that is whether your retirement plan is on track.
Now, that's assuming you do have a retirement plan. If you don't, it's how are you going to know if it's on track? But look, it's just a question that we need to be asking at the beginning of the year. And I suppose, do we have a retirement plan, and is it on track? So I guess for younger people, that might be just as simple as getting hold of your superannuation statement or logging on to your superannuation account and just have a look at it. See how it's tracking. Most people just get the statement and put in the drawer, put in the bin, and don't have a look at it. But have a look at it. See how it's tracking, and see what your returns are. Maybe consider, depending on your situation, whether you're going to salary sacrifice. But it's probably a question particularly for older people who are perhaps in their late 40s, and certainly once we're in our 50s, we need to be looking at our retirement strategy fairly carefully. We've talked about this before. Probably as an absolute minimum, we'd need really $500,000 in super, and so it's time to have a look at that. If you've never met with a financial planner and you're over 50, it's probably a good thing to put on the list for 2015.
Yeah.
And check how you're tracking, and if there's some new strategies that you need to put in place.
Rob, you said an absolute minimum of 500,000. Of course, they've increased the pensionable age to 67. But
gives you more time to save up.
Yes, but average super amounts are much lower than 500,000, aren't they?
Well, they are, and I guess the reality is that most people won't have enough in retirement, and we're going to be very reliant on the age pension. So I guess it's one of those things, and everyone's situation is different. And at least look, if you're over 50 and you haven't met with a financial plan, it's a good idea to do that.
About time you did, and you're right about what you say. For the younger people, absolutely important to think about it. I never had a retirement plan when I was younger. The plan was, one day I'll retire, and that's about as far as it went. So I wish I'd had your wise words of wisdom at that younger age. All right, so the fifth part of the financial health check, I've got rented lips again today, are you getting the best possible rate on your home loan?
Yeah, again, this is important. A lot of people just let the home loan roll on, and what may have been a good rate 4 or 5 years ago, or even 12 months ago, may not be such a good home loan rate now. And I mean, I'm talking to people about this all the time. I actually spoke with someone last week, and the product he had and the lender he was with, I remember writing a lot of those loans about 4 or 5 years ago, and it was very, very competitive. But what I'm looking at refinancing him to now will save him at 0.85% on his home loan. So I think the banks thrive on customers just doing nothing. So again, 2015, have a look at it. Get a home loan health check and see if things can be better. You don't necessarily need to refinance, but I think it's worth talking to a mortgage broker. We've got all the rates there. We can compare, and we can even apply for discounts, extra discounts on your behalf. even if we haven't written the loan to begin with.
Yeah, okay. So the final element is, do you have life insurance?
Yeah, and again, this one's an important one. Most Australians are underinsured. For most of us, we'd be horrified to think of someone who owns a $500,000 house who didn't have it insured. We'd be horrified. Or a $50,000 car with no insurance. We wouldn't think of not insuring.
I think our lives are worth a little
That's
more than
exactly
that, aren't
right. Our ability to earn an income. So, again, if we haven't got adequate life insurance, beginning a new year, let's have a look at it. And you need to look at things, particularly like your death benefit. If something happened to you, at the very least that you're able to pay out your home loan, and income protection. I'm a big believer of income protection as well, so that if you get sick and you're not able to work, that you've got an income stream that will keep you going through that period.
Yeah, most important. And people don't tend to think ahead like that. You
No,
know,
it's very important. I had back surgery 5 years ago, and I put a claim in on my income protection, and it just took some pressure off me in that period while I was recovering, which was very worthwhile having.
And Rob, you talked about obviously insuring your principal home as well. I mean, I think that's particularly important for us who live in the Blue Mountains.
Yep, absolutely.
Yep, well, with the fires and all, but important for anybody, and also business insurance as well.
That's right.
For those of us who are running our businesses, very important thing to have.
So it's a good thing to revisit all of our insurances,
Yeah.
and make sure it's adequate.
And again, particularly for business owners, you know, if you're the one running your business and you get crook,
Yep.
that's it. Not only does your income stop, but it affects your entire business as well.
Absolutely.
So insure against it.
That's exactly right.
All right, Rob. More wise words of wisdom coming from Rob again next week with our weekly finance segment. And thanks for joining us again this week,
pleasure.
Rob. I know you only just made it to the station on time, but thanks for not breaking any speeding rules as you were coming up here. All right. Well, until next week, we look forward to your company again.